Assalamualaikum, my name is NURNADHIRAH binti AHMAD BAKRI. My matric number is A228042A. So the introduction is Bank Islam Malaysia Berhad BNB and Malaysia Banking Berhad Maybank have been selected for this investigation. The two establishments which provide a range of financial products according to their client requirement embody the different philosophies of Islamic and traditional banking in Malaysia. First, BINB. BINB Malaysia first fully recognized Islamic bank was founded in 1980 and is a leader in providing financial services and products that adhere to Sharia. Islamic value which forbid interest riba and uncurtained qara and gambling marshir rigorously followed by the bank, and as it promotes economic growth, its goal is to offer moral, just and socially conscious financial solution. And second is Maybank. Maybank is the biggest financial service group in Malaysia, having been established in 1960. Maybank function as a traditional bank and offer a variety of service and products such as credit facilities, investment option and loan. In order to serve clients looking for more financial solution, Maybank has launched Maybank Islamic and Islamic banking division that function is accordant with Sharia. The two financial instruments used for this research are the fixed rate loan and traditional financial product from Maybank and Murabaha and Islamic financial tool from BINB. The Islamic instrument known as Murabaha is a cost plus financial plan in which a financial instruction by an asset on the client half and resell it to the client and predetermined price that includes a profit margin. Trade house and personal financing are all common asked for it. The deal complies with Islamic precept by guarantee opponent and avoid interest. Fixed loan conventional instrument. With a fixed rate loan, the borrower repay the principal and interest at a predetermined rate over a predetermined period of time. It is a product that Maybank offer and is used to buy assets like home and car. Also, fixed rate loan give borrower consistency in their payback plans. They are based on interest, which is forbidden in Islamic banking.
My name is NURNADHIRAH binti HAMZAN. My matric number is A22804113. I want to talk about the variety of features. The first one is about the instrument. For the conventional bank, have a 2 point. The first point is interest-based instrument. The second point, the derivatives for risk mitigation. For the Islamic bank point, have a 2. The first one is Sharia compliant instrument, and the last prohibition of rarar and riba. For the product, conventional bank have a 2 point. The first point is about a loan, and the second point is about the mutual funds. And the Islamic bank point have a 3, Islamic housing financing, takaful and Sharia compliant equity fund. Next is about the contract. Conventional bank have a 1 point only. It's about the debate-based contract, and the Islamic bank have a 3 point. The first one is profit sharing. Second point is about the trade-based, and the last leasing contract.
My name is AFIQAH Nabila binti HAMIDI. My matric number is A22800775. Next, I will explain about the illustration on the instrument for Islamic banking and conventional banking. For Islamic banking, focusing on aspect core principle in emphasize the prohibition of riba as the ethical and legal foundation of Islamic banking. Second is analytical methodology. The study released on interpretation of the Quran and Sunnah, supported by classical and modern scholarly debates. For third is comparative analysis. Its highlight different from conventional banking such as profit loss sharing, risk sharing, and the ethical frame of Islamic banks. For the conventional banking, deposit is saving, current and fixed deposit provide bank with fund paying interest to depositor. For loan is personal, business and mortgage loan generate income via interest charge to borrow. For the interest rate is profitability depend on the difference between interest earned on loan and interest paid on deposit. Third is bond and security. Next is payment, service, risk management and overall rule. The illustration on the product for Islamic banking. First is Mudarabah, is profit sharing partnership where one party provide capital and the other advertise. Second is Musyarakah, is joint venture where 2 or more parties contribute capital sharing profit and loss. Murabahah is cost plus financing where the bank buy and sell goods at a predetermined markup. For the sukuk is Islamic bond representing ownership in tangible assets, revenue or service. For the takaful is Islamic insurance based on mutual assistance and responsibility. For the conventional bank, first is deposit account, is saving, current and fixed deposit with interest income. For the loan, personal business and mortgage loan generate income through interest. For the credit card, providing credit facilities with interest on balance and fees. For the investment service, is access to mutual fund, securities and bond trading. For the insurance, is offering life, health and properties insurance. Is the illustration on the contract flow. For Islamic banking, first is proposal. The client present a proposal for a financial transaction. Second is Sharia screening. Is the proposal is screened to ensure it complies with Sharia principle, eliminating prohibited activities like riba or gharar. For the contract formulation, once approved, the bank create the appropriate contract such as murabahah is cost plus financing, musyarakah is joint venture. The last is ijarah. For ijarah is leasing. For conventional bank is application. The customer applies for a loan, deposit or other product. For credit assessment, the bank evaluate the customer's credit worthiness to determine eligibility. For contract formation, key terms like interest rate and repayment schedule are outlined in a signed agreement. For the execution is the loan is disbursed or the deposit is made. Monitoring is the bank track repayment or interest payment. For the settlement is the contract conclude once all obligations are met like loan repayment or deposit release.
Assalamualaikum, my name is Muhammad Hakim bin Hanapi. My metric number is 822808000. Today I would like to talk about provide advantage versus disadvantage of instrument, product and contract. For Islamic banking instrument, for advantage, this instrument avoids speculation, gharar and interest, riba, forecasting economic stability by trying financial activities to triangle assets. For disadvantage is the range of instrument is limited due to Sharia constraint which prohibit interest based tool and derivatives. This can reduce competitiveness in global markets. For conventional banking instrument, for advantage, conventional bank utilizes a wide array of instruments including bonds, derivatives and equities, allowing for greater flexibility and adaptability. For disadvantage is heavy reliance on interest exposed conventional instrument to market volatility and economic cycles. Okay, next, Islamic banking product. For advantage is product like murabahah, cost plus financing and ijarah leasing are designed to promote fairness and transparency while avoiding unethical practice. For disadvantage is Islamic banking product often mimic conventional offering but are reduced to comply with Sharia. This replication sometimes lead to inefficiency and higher costs. Next, for conventional banking product, for advantage is conventional banks offer a broad spectrum of product from saving account to mutual fund, catering to a wide range of customer needs. For disadvantage is harsh dependent on interest income makes many products sensitive to economic downturns. Okay, next, for Islamic banking contract, for advantage is contract like istinah, manufacturing, finance and salam forward sale ensure clarity and fairness, minimizing disputes. For disadvantage is certain contract like murasakah require rigorous monitoring to ensure compliance, editing operational burdens. Next, for conventional banking contract, for advantage is standardized contract for loans and mortgages ensure quick processing and widespread applicability. For disadvantage is conventional contract prioritize lender security, often placing disproportionate risk on borrowers. That's all for me. Thank you.
Assalamualaikum and hi, my name is NURNADHIRAH binti HASSAN. My matrix number is 8228036. So today I'm going to present about my parts that is provide comparison between conventional and Islamic instruments, product and contracts. So for the financial instrument, Islamic instruments are designed to comply with Sharia principles, ensuring they are free of interest, uncertainty, and speculations. Examples include sukuk Islamic bonds, which are asset-backed and offer returns based on the performance of an underlying asset. Takaful serves as an alternative to conventional insurance, operating on mutual sharing principles. Other Islamic instruments include salam, forward contracts for goods, and istisna, contract for manufacturing or construction. These instruments are structured to link financial activity to tangible assets, promoting real economic growth, while conventional instruments, on the other hand, operate without religious or ethical restrictions. They include interest-bearing bonds, share and derivatives such as futures, options, and swaps. These instruments provide flexibility and liquidity in financial markets, but are often speculative and not necessarily tied to real assets. Insurance policy are another common conventional instruments, offering risk coverage in exchange for premiums without a mutual or asset-backed requirement. Financial products. Islamic products are built using Sharia compliance instruments and contracts. These include saving and investment account structure or mudarabah, profit sharing, home financing through murabahah, cost plus financing or ijarah, leasing, and takaful insurance policy that operate on collective risk-sharing principles. Islamic banks also provide corporate financing through musyaharakah partnership, enabling businesses to share profit and risk with financiers. This product emphasizes fairness, ethical investment, and a tangible connection to real assets, while conventional products cater to a broader audience, often prioritizing profitability and flexibility. Examples include interest-based savings account, fixed deposit, and mortgage, and personal loans, where borrowers pay a fixed or variable interest rate. Other offerings include insurance policy, which transfer risk to the insurer, and investment products like mutual funds and exchange trade funds, ETFs, unlike Islamic products. These are all not restricted by ethical guidelines and may involve speculative or interest-based return. The last one is financial contracts. Islamic contracts are the legal foundation of Islamic finance, ensuring compliance with Sharia principles. Examples include murabahah, cost plus sale agreements, where a financier purchase an asset and sell it to the buyer at the markup price. Mudarabah and musyaharakah agreements enable profit sharing and partnership, aligning the interests of all parties. Other notable contracts include ijarah, leasing, salam, forward contracts for pre-agreed goods, and istina, manufacturing or construction contracts. These contracts ensure transparency, fairness, and share risk, avoiding interest or unethical practice. While conventional contracts are widely used in global finance and prioritize flexibility and financial returns. Common examples include loan agreement, which stipulate fixed or variable interest payment, and bond issuance agreements that define terms for interest-bearing securities. Contract for future, option, and swap enable speculative trading in financial market. Additionally, standard lease agreements are used to rent assets without any requirement to comply with ethical or religious principles.
Finally, is conclusion. The essential distinction between the conventional and Islamic financial system are brought to light by the contrast of fixed rate loans and murabahah. Murabahah is in line with Islamic finance standards, which implies justice, openness, and moral accountability. It guarantees that there is no interest on financial transactions and that the client and the financial institutions split profit and risk fairly. As a result, the financial model becomes more moral and inclusive. The fixed rate loan, on the other hand, is a prime example of conventional banking profit-driven structure, where interest is the main source of financial gain, even while this product gives borrowers simplicity and predictability. It represents the traditional system preference for efficiency over morality. The comparison of the two products makes it clear that Islamic financial is a good stable for traditional banking, especially for people looking for financial solutions that both Sharia compliant and socially consist. Recommendation: boost public knowledge of Islamic finance. Organizations such as BIMB have to do more to inform the public about the moral principles and advantage of Sharia compliant securities like murabahah. This may draw in a wider range of clients. Second, promote product innovation in Islamic financial. Islamic financial institutions should be innovate by creating more adaptable and technology advantage solutions for murabahah and other goods in order to stay competitive. Third, adopt dual banking model. Maybank and other traditional banks should keep growing their Islamic banking business by using their current infrastructure to provide Sharia compliant substitutes. And the last one, encourage interaction between institutions. Increased cooperation between Islamic and conventional bank can facilitate an exchange of information and accelerate the global adaptation of ancient banking practice. Thank you.